Welcome back, C3 family and crypto community. Hope everybody's having a great day, survived the gnarly short squeeze situation. And we got a jam-packed video for you today going over a multitude of things. And as always, I got my man in the middle on the charts, Al. And then to his very right, I got Chris, the man about NFTs and gaming tokens. So that's going to play into what we're going to be going over today. We're going to be going over some on-chain data with Glassnode. We're going to be talking about the Fed and Mr. Happy Biden over here with all his money. Be talking about short squeezes, how the market's doing, going over some gaming tokens, as well as going into other topics of TA and technical analysis on Bitcoin, total market, Ethereum, and a lot of our other gaming tokens. So with that being said, I'm going to jump right into the on-chain data with Glassnode. And this is for this week, the week of the 30th. And we saw a crazy short squeeze happen Sunday evening, Monday morning early. So with that, as we open the week, open interest in the options markets suggested that volatility was expected. So we saw this on Sunday around 5 p.m. Pacific Standard Time. That's when UTC Monday morning opens. So if you're not familiar with that, you should look up UTC, Universal Time Zone. Anyway, open strike price 1 month out, August 27th, contracts show a notable preference for strikes well outside the current consolidation range. So we see we got shorts in for around 25K with 1,388 Bitcoin in open interest. Then on the other side, we see an $80,000 Bitcoin call with 1,500 and some change in Bitcoin in open interest. So this is what they're talking about right here. Here's the shorts and here's the longs. And then this is the consolidated trading range. So this is where you need to be ultra careful. And this is where you can get wrecked the most. So that's why we saw a record breaking short squeeze happen. So perpetual futures open interest climbed by a notable 1.4 billion alongside the rally in price. Oftentimes, elevated open interest starts to increase probabilities of a volatile leverage squeeze occurring. Basically, that's what happens when you see a lot of money aping into the markets. The market makers are going to manipulate it and make it work in their interest. So in general, cash margin positions are preferable for market stability as they remove a layer of risk that is present when volatile crypto margin futures dominate. So as we could see with the price of Bitcoin coming down in calls, we saw the interest of money flowing in. So we could see as the market started to go down that these calls got lower and lower and lower. So confirming this trend, we can see the relative dominance of crypto margin futures positions has been in structural decline over the same period, falling from 70% down to 52.5%. So this is the percentage going down. So this is when we saw margin accounts starting to not be used. This is the decline of them. So that's quite a bit of jump, about 17.5%. So to assess the directional bias of futures market, we can see that perpetual funding rates have continued to trade negative. This indicates the net bias remains short. That means that more people are thinking it's still going to go short and still going to go even lower. So this metric in particular helps us identify that Monday's price rally is likely associated with an overall short squeeze, with funding rates continuing to trade at even more negative levels despite price rallying 30%. So let's jump into this right here. So nearly $900 million in crypto shorts were squeezed in a single day as Bitcoin surged into the 40K region. So to get a little more particular, 883 million worth of shorts were liquidated in a 24-hour span amid the rally to 40K. Data from Bybit also shows that Bitcoin accounted for 81% of the squeeze, with 750 million liquidated on Bybit alone. So most of the crypto short liquidations happened late Sunday night as Bitcoin's price spiked 10% to break the 39 level for the first time in 6 weeks. So here's a quote from Ryan Todd, researcher at The Block. He said, "We've seen this in the past when Bitcoin has entered a choppy trading range for several weeks, meaning just up and down, sideways, consolidating, boring trading, with traders positioning towards a bearish bias." Todd said he cited $1 billion liquidation late in December when Bitcoin broke past 20K, and a January $800 million liquidation when Bitcoin passed 30K. So this is pretty normal along the journey of Bitcoin going up and down. It's just the volatile nature of it. So with that being said, I'll just jump into this article real quick. Fed faces double inflation as supply chains falter. Economists question spending. And apparently Biden is not worried at all because he's got the money press in his back office. So, all right. A few analysts believe the upcoming 2-day meeting held by the U.S. Central Bank's Federal Open Market Committee will give us market clues on whether or not the Federal Reserve plans to taper quantitative easing and raise interest rates. So quantitative easing, real quick, is when short-term interest rates are at either zero or approaching zero, the central banks pump more money. So real quick, quantitative easing increases the money supply by purchasing assets with newly created printing money, bank reserves, in order to provide banks with more liquidity, basically for them to put more money in their vaults. So in response to the economic shutdown caused by the C word and pandemic, on March 15, 2020, the U.S. Federal Reserve announced a quantitative easing plan of over $700 billion. And then again on June 10, 2020, after a brief tapering effort, the Fed extended its program, committing to buy at least $80 billion a month in treasuries and $40 billion in mortgage-backed securities until further notice. So that's how this worked. The Fed prints more money and then they buy more stuff with it, pumping the economy even higher. So that's all I got right now. I want to bring in the crew here. Excuse me. All right, Al, how's it going?
Going good, Jay. Thanks for the morning update. Gotta love it.
What are you seeing in the charts today?
Oh man, there's a lot to be had in the charts. It's a pretty exciting day. It's an exciting week. I mean, I think we've all been kind of lulled to sleep over the last week or two of this boring sideways downward trajectory. So any move's a good move in my books, but let's figure out why and where to anticipate our next stop. So over here, we just have what we continue to bring up on most of our streams is our total market cap. And like we've said many times before, this is a representation of all of the money and volume going into crypto, Bitcoin, Ethereum, ADA, and so on. So we like to really pay attention to this because this to me tells us how much money is going into the markets. And as you can see, a lot of money's gone in really quickly. So right here on July 20th, to July 26th. So in a 6-day period, we did a 33 to 35% jump. And that is impressive. It actually looks like the counter to what we experienced on the drop in June. So this is pretty expected, but you have to assume that this could also be a liquidity build. And so I would be looking for the total market cap to kind of at least come back down to the 1.4, 1.39 trillion range to retest its support before we see any astronomical numbers. I do believe that it might fall through here and continue to work its way back down to some of our stronger support levels around the 1.25 to 1.22 trillion dollar level before we really have a turnaround in this market. But let's jump over to everyone's favorite, the golden child. Here is Bitcoin. And this is a chart that we've showed a few times in past streams, and we've left it unedited for this exact reason because it's fun to see what you predict and it's fun to see where you go. So here we can see we started predicting on this chart projecting around the first week of July. And we projected a downward movement and then a breakout to about 42 to 43K. And this was projected based off of our fib lines and our fib sequences, as well as past movement. And the exciting part about that is, let's zoom in here and give you guys a nice clear visual. As you can see, we anticipated a break out of the channel right here, but instead we broke out of the channel right here. So let's take a look at what that is. That is from there to there is about 5 to 5.5 days. So we were about 5 days off from the breakout, but in our projection, we anticipated that it would go about, it would hit about 40. So our projection to go to 42K or 40K in 6 days. And so we were anticipating this kind of aggressive movement or big pump. Well, let's see what we did. We went from here to, so we did it in about 5 days. So almost I guess to summarize it and to say it in the most simplified term, this move was anticipated. And this is something that was expected. And I believe that this is more of a liquidity build than a reversal. But there's plenty of indicators coming around that will help us decide and will make it more clear coming up. I do anticipate we'll continue to move up to about 40 to 42 to finish this week off. But I've went ahead and given us some nice clear indicators right here of when I think the price will have to come and retest levels. And I think we'll retest any levels from 33% to 50% to as catastrophic as 62%. And so anywhere from 22 to 28 to where we're at now is what I would anticipate Bitcoin to sit at before we do break out. But we're definitely watching a day-to-day charts, and this breakout was exciting because it is showing that we are waking up and things are starting to get going.
So Alex, real quick, those percentages are your fib retracements, correct?
Yeah, and so and they're fib retracements from the most recent local high.
Okay.
So they're not fib retracements from the assets overall. It's more of an immediate retracement, and they're actually, I believe, all pulled from the local high in May.
Okay, awesome. That was going to be my next question. What was that local high you're talking about?
Yeah. So since the drop began is what we've been looking at, like where, so from the local high up here at about 60K, this was our 33%, our 50%, and our 62%. Okay,
no wonder there were so many orders hit down on that 50% retracement. Mm-hmm. That makes so much sense.
Yeah, you can see it hit multiple times. It hit here in May. It tried to hit here 2 weeks later. It hit here first week of June. It hit here 3 weeks later. It hit again 4 days later. It just hit 2 weeks ago or a month ago. So I mean, yeah, it's definitely a spot that you can see we've had to test that area quite a bit. But that brings us into what time of the year are we at and what did we do last time? So I like to do what I call a retro peek at where we're at and where we're heading. And so right here, you can see all of these orange or yellow bars. They are lined up at the month end, month beginning. So the space between them represents a month. And right here is pretty much where we are in comparison to the next month. So I wanted to look at 2018 first. And you would notice that if we're here at 2018, they had a very similar pump, about 40% in 3 days in 2018. And that followed suit with a 30% retracement in the following week into August. And so that is something that I think we need to pay attention to, need to be aware of. that in the past we had similar pumps that actually were indicative of a bearish short-term cycle ahead, or at least a bearish month. But there's also plenty of examples of when August has been a much better month. And so you can see in 2019, here was the start of August, we went up another 40%. Granted, in the month of July in 2019, it was a little bit, we didn't do any pumps, we went downward motion. So I don't know if that's a fair example, but then we can go back to 2020 and you can see right here in July, we had the same pump right at the end. And you can see in this pump, we pumped up 35%. And then went sideways for the entire month of August. So I could see that happening as well. I could see this pump not being retraced and us just moving sideways, or following suit that we did in 2018 and a possible 30%, 35% retracement from where we're at would put us somewhere around the 27 range. And so that's really what I see as the possible outcome for the next week or two, because it is the end of the week's coming. The end of the month is going to follow suit with the end of the week. We'll have a lot of contracts closing, a lot of open, and it's really the on-chain analytics, as Jake was pointing out earlier, are not quite showing that it's a turnaround yet. You can see the volume has been down. The number of transactions are down, as well as the number of new addresses is really what has been the most surprising to me. The number of new addresses and the number of active addresses are continuing to head in a downward motion. And I would like to see those turn around to show that people are getting excited. They have faith back in crypto before I expect a rally or any time to be testing all-time highs. So that being said, went ahead and channeled out what we believe is our liquidity zones. So you can see right here, I'll zoom in a little bit better for you guys, get rid of this. This channel right here is the liquidity zone, and this channel right here is the liquidity zone. And when I say liquidity zone, it's when the market makers are building enough liquidity for a move to be made. And that's normally when a drastic move to the upside or to the downside gets moved once they spend enough time in a liquidity zone. So right here, you can see they filled the liquidity. They were setting their longs, finding their positions, and then pumped it up. I do anticipate that we will spend at least a day or two hanging out in this liquidity zone, setting some short positions before making any moves back down. So as we know, I draw like a sixth grader, so we'll get those off the screen. But anyways, a lot of excitement. Bitcoin's moving. We like movement. And as a trader, there's plenty of places to find good trades. There's been shorts and longs of equal deliciousness. And so that's kind of fun to find, fun to pay attention to. We have been noticing that a lot of things do look peaked out. But speaking of things that are peaking, gaming tokens have peaked like nobody's business. And I believe that our man Sifu is going to go into detail on that for you guys. But I was just fascinated by the charts on them. And I was looking at Axie Infinity, which has been a terror in the space. We had covered it in July 20th when we were playing around $13, $14. And you can see since then, it has almost 4x, at least the 3x since then. And so looking at Axie Infinity, Audio, and Engine, you can see there's a lot of strength in these projects and these gaming tokens that they're almost getting to a point that they're ready to stand alone. They're ready to walk to dance to their own beat, because they're tired of crypto's volatility and the aggression that it goes up and down. And these gamers aren't going to have it. We've seen it with GameStop. We've seen them in the stonks. They will stand behind projects that they believe in. And this is absolutely incredible to watch these projects hold so strongly as an entire market bleeds. And, you know, so if I was looking into new projects, I would have a heavy eye on gaming. And if I was looking to get into gaming, these would be the 3 top projects I would be entertaining. That being said, since these are the 3 top projects that we are entertaining, we are looking for positions. And there's nothing more satisfying than hitting that 65% retracement, because that is one of the safest. It's almost a guarantee to come back into profit. It gets hit the most. And so for me, on all of these projects, I would be looking at least at the 65% retracement, especially after pumps of this magnitude. I mean, Axie Infinity pumped up 280% in 7 days, and Audio pumped up 70% in 6 days, and Engine pumped up 60% in 6 days. I mean, these are unfathomable gains in a week. And so I do expect there'll be some sort of consolidation, but these are all extremely strong projects. And I think that this is the beginning of an entire era that it would be intelligent to get into these projects before they're commonplace everywhere. That being said, that's all I got for the fun. I'm going to slide this over.
All right.
Was good.
Thank you for that, Al. So yeah, let's just we're gonna go ahead and continue right on with that. Speaking of gaming tokens and percentages, we just look at, you know, the graphs here. We see a lot of green. Speaking of that, this guy right here, Red Fox Labs, this I believe is our only red as far as our list of gaming tokens go. So as you can see, chart wise, they are quite exotic right now. And let's just let's take a peek at some other percentages here. Look at it. Mist, 7 day, 353% it has gone up. I mean, whew, that's great. But we got another one. Vidya, 119%. GameSwap, 300%. 108%. DeFi Social. We got a lot of other high numbers under the hundreds too. 72, 53, 89. Look at this. DeFiville Island, 644%. I mean, basically 645%. So yeah, these are, look at this. Starlink, 518%. These are pretty amazing, guys. These are all worthwhile taking a peek at. And if we're at the bottom of the list here, our trending coins are these 5 right here, and Mist being one of them. And you know what? Let's check Mist out here. Let's see what it's all about. It's very cool. Speaking of just NFTs, and so it's pretty simple graphical overview, but the idea is that you're gonna be able to do a lot with, you know, without a high graphical infrastructure interfering with it. In any case, so right here, platforms, obviously Binance Smart Chain, because you always need a MetaMask or a digital wallet to play these games, but even cooler, you can play this off of Steam. So all you heavy PC users can, you know, get that right there. But let's see what Mist is. It's pretty cool. I'm not going to click on this launch trailer. You guys can do that on your own. But basically, collect NFTs, battle epic monsters, and explore infinite immersive environments in this blockchain-based NFT action RPG built on the Mist NFT framework. The game universe connects to the Mist native token as the in-game currency, allowing you to farm and stake tokens to earn in and out of game rewards. Basically, pretty much every NFT game does. They have their own token. That's what you need to get all their rewards and everything. But this is basically like a Minecraft for adults. I mean, you got a little overview here of kind of different characters and items that will give you more rare ability. You have this guy right here, super swift collectible mount. Also increases the rider's carrying capacity for non-weapon items. So basically everything, all your collectibles and NFTs in game are all stat based. So that's like, You know, anyone in the RPG universe knows exactly what I'm talking about. So all these are going to add to your character's value. I believe there you can even create these as well. And then obviously you can farm and stake in game. This game looks pretty cool. This game looks a bit more up to par as far as kind of action game, RPG, farming, yielding, having property, virtual property, the whole shebang, which is pretty cool actually. It's so Axie Infinity, take that for example. 6 months ago, I believe there was land value, virtual land value that was worth $300 at the time. Currently sold for $30,000. So the gaming NFT universe is no joke. People obviously take their marketplace very, very seriously. And there is money to be made right here. I was just in the midst. I'm gonna actually try this out, so I'll have a later update for you guys. But this game, you kind of develop cuties. It's similar to Axies on your Axie Infinity. Let me find it in here for you. But yeah, you develop, they're cuties. They're just little animals that basically are in your gaming universe. Here we go. Let me just get to a better overlay for you guys here, just to give a quick example. Don't need to see the update. Kind of took me back to where I was. I guess it wants me to get past this screen here. Let's see. I got it here. No. Well, in any case, I'll actually have a better video for you guys on that later. But this one is cool. This caught my eye because it's up 36%. And if you just look at the chart here, it's not only up, but it's literally, it is moving up from, you know, where it has been at. So it's climbing. It's not just a matter of, oh, this is doing better now, it's been on a slump. No, these guys are relatively new. Look at these numbers here. These are pretty exotic. If I say anyone looking into the gaming token universe would be a very smart move. We have, like I said, and it clearly is doing its own thing, as my man Al was saying. These guys have been spiking, and even more so now with the market pumping up a little bit just as it is. So yeah, I'd say anyone just come in here and just do as I did. Come into CoinGecko, just keep it simple. Click into your categories, scroll down. You can actually check out everything categorized right here. I just scroll all the way down into gaming. Just keep it simple. That's where I'm usually looking. Brings us here. You got your whole list. Click on the project, do some research. Just by the sheer numbers alone, that's a good first step in a direction. Although it's not investment advice, but there's a lot of great opportunities right now to get in. So, you know, for all you heavy traders, may the market be with you. Trade hard, trade and destroy, but trade carefully as well. We're also gonna jump into some other random kind of news here. So what do we got here? This is gonna steer away a little from the gaming, but we've got a Brazilian Burger King is gonna now offer customers basically doggy treats that you can purchase with Dogecoin. I'm not really going to get into the whole article here, but basically for about the price of 3 Dogecoin, you can purchase what they're calling a dog purr, Doge purr, however you want to pronounce it. But it's a flame broiled flavored doggy treat. So great, you know, anyone is not going to Burger King, now you can feed that to your dogs. Great. But no, so in any case, the funny thing is here is, hey, Dogecoin has its first possible utility, and it's for dogs. So I guess that's relevant. I guess we'll have to see how that's really going to work out, how you actually pay with some Doge and go and purchase that. I believe you have to look into it, kind of get in line. But that's That's a kind of funny random thing I thought I'd put out here. This is actually a cool article. So we got banks in Kazakhstan to open accounts for registered crypto exchanges. Just by this picture alone, I'd say it looks like a pretty epic city. But basically, companies providing trading services for digital assets will be able to open accounts with banks in Kazakhstan. Local media reported, quoting the country's crypto industry association. So basically, pretty much what you can discern from this is they're very into crypto. They're obviously moving right into adding to exchanges and their banking services, which I think is pretty cool. So Kazakh Bank will be permitted to open accounts for cryptocurrency exchanges registered at the Astana International Financial Center, Kazakhstan's National Association of Blockchain and Data Center industry announced, quoted by local news portal Habar 24. I guess that's the news station out there. This move is part of a pilot project with second-tier banks that expected it to continue for 1 year. So basically, they're rolling it out. They're going to go through their trial and error. This is what I would take from it. But yeah, these guys are going to be, moving their regulation right into crypto, and it's going to give potential for crypto investors to get in out here, or anyone who hasn't to become a potential crypto investor. So this is another pretty awesome article, which I didn't know that they were involved in crypto as much as they are. So if you actually are interested and you came and checked this out, I think you'll find a lot of relevant info there. It's just another bullish indication on regulations coming into the crypto scene, but not just here in the US, on a global spectrum. And let's see what we got here. I think this will kind of cater to that a little bit. We got MasterCard launches cryptocurrency startup accelerator. So basically, yeah, MasterCard launched an accelerator program for cryptocurrency startups. So I think that's a cool, smart move. Anyone who's trying to launch into this industry, you have a little bit more options to see who might back you on a financial standard and just help you get in. So MasterCard paving that way, I think, goes hand in hand with a lot of the institutional adoption coming into play, even the news on Amazon wanting to make their own kind of token, as well as offer crypto, transactions. Basically, you can purchase crypto right through, not crypto, but you can purchase through Amazon with crypto. So that's pretty interesting. These are all big moves. Binance, a lot of news happening with Binance. This one's a little old. I wouldn't say too old, day old or so, but they're dropping their leverage levels of over 20x will not be available to futures accounts within the first 60 days of their opening. And they're just basically adding a new platform of rules. But, not everybody is leveraging, and not everyone that does leverages 20x. So this will only affect certain people. But I think the relevance to that is that Binance, like I said, lots of stuff happening with Binance. They want to be licensed everywhere. So their CEO, this guy right here, Changpeng Zhao, it basically recently has said that he wants a major cryptocurrency exchange to work with local regulators as it establishes regional headquarters. So basically, yeah, you really read into this, it just pretty much explains how, as they want to be licensed everywhere, they want to offer their services as widespread as they can, following all the correct regulations. And basically, so they're looking for the right guy to help them do that. So right here, said by the CEO, I've led the company for 4 years and it's good, and we've got through this pivot. I don't think I'm the best person to lead that effort. I think having somebody with a very strong regulatory background is actually better. So yeah, he's just basically being a good coach and saying, yeah, we need a new player on the team and one that specializes in this field. So that's just another indication they're moving right along with the adoptions as they need to happen. They even have this they're introducing a simple tax reporting tool. So everyone that's using Binance app, now you can basically very easily allocate, your capital gains and losses on Binance to a third-party tax vendor. So it's just going to make it easy to report your earnings and anything you do through this. It's going to make it transparent. So you can just basically utilize this system. Guessing it's going to be like using any like H&R Block or having them go over this and just, make all your tax work line up the way it should. But they wouldn't be doing that if there wasn't a lot of big moves happening in the background, pushing things forward with the mainstream adoption. With all the inflationary, I think the mainstream adoption will be happening anyways. And these are the steps that we're going to start seeing as, not just institutions buying this much Bitcoin or purchasing that much. And, these are the things that have to lay the foundation as well. We already know the money's there when they need it. However, let's jump back to actually one last one quickly to add to that. Goldman Sachs files DeFi ETF, exchange traded fund application. They filed to the SEC. So boom, another kind of stamp mark in the regulatory formatting that has to take place for these institutions to buy in, or not buy in, but basically get in on this. So there's a lot of moves happening, and lots of moves happening. There's tons of news to check out, but let's go back to this real quickly as I end this section here. We got Yield Games token launch crashed by 32 whales. So basically 32 persons with a lot of money bought out their entire launch stockpile. I mean, that is ridiculous. So what that really means is for all the other people that were waiting on this project and believed in it and were like, yes, this is happening, I'm going to get it now. I've got this money that I put whatever it is. They just got cut out of line by 32 big dogs who just basically took up the entire liquidity pool. So we're going to see how they're going to remedy that. That's pretty interesting. And it turns out, so according to official blog post announcing the offering in June, the aim of the YGG token launch was to decentralize ownership of the guild to stakeholders and players. However, of a maximum of 87.9 million tokens, 25 million have been bought by 32 whales during the IDO. Yield Guild Games will distribute the remaining 62.9 million tokens to current guild members for their participation in the YGG community to date. And, all this stuff happens over on Sushi Swap. So we'll see if that 62.9 million tokens gets distributed a little bit more widespread. But wow, these guys came in hard and they basically left nothing to no one. And on another quick note, this is pretty cool, I thought. 10 million tokens of 1inch Foundation plans to distribute to compensate for gas costs. So basically, it's only users who stake 100,000 1inch or more will receive a full refund for their gas fees. But it does break down to get it to a few more users. But that's pretty cool. So that's kind of like, I guess you can say, almost getting a tax return. You've done exchanges and swaps on this. You basically utilized the platform. You've paid the gas fees when you had to. I'm sure they've gone up and gone down. But now you got a little compensation if you're in that 100,000 pool where you stake that much. But either way, I like to say if you're heavy into staking, that may not be too much for big stakers. And this is a pretty cool incentivized reward. What this article actually elaborates on, that the purpose of it is that right here, the price of 1inch utility and governance token. That's not it actually. What I was going to get at is that this was all created through their governance token. Basically, it was voted on and determined by the users within the actual platform that actually used the swap. It wasn't just something that happened like high up, like in outside companies where a corporate decision just happens and, oh, this is what's going on, and you're either in the pool or you're screwed. No, this was a cool actually protocol decided upon the people in the network, and they're going to be compensated for it. So this is just another cool thing why cryptocurrency is just cool in general, because it really is by the people for the people, as we can see a proof in the pudding right here. So maybe we'll see some other cool rewards follow through from some other swaps and platforms. But I think that was a very diligent move. And I'd like to say that's about all I have. And we could probably pass it back over to my colleagues here.
Right on, Chris. Thanks for all of that. Great news. Pretty interesting. You're talking about MasterCard. I think they feel like they need to get into the game right now. They with the on Crypto Banter's live stream yesterday, he was showing how Jeff Bezos could increase his profits by 50% just by cutting out credit card services. That's it. Just eliminating the middleman and you'll increase revenue by 50%. That's the biggest takeaway of blockchain and how it's going to be implemented into our everyday lives, real world utility. So
yeah,
I'm glad you brought that up. I had seen the big dogs like MasterCard and Visa getting into it. It's just a sheer sign of they're either going to get in or they're going to be left behind. So
it's same with the rumor of Amazon creating their own crypto. It's for that exact thing, to bypass the fees, to bypass the middleman. I mean, and if a company that large can recognize this, imagine what something like that would do for ma and pa shops and local communities when they can bypass that middleman that's really hurting them. You know, it's one thing if you're making a couple billion and they're taking some of that. It's another thing when they're taking half of your couple 100,000.
Right.
Yeah.
Or just paying that 2%, 3% every single transaction. That adds up for a mom and pop business. They don't have the revenue to lose for a year and they're like, all right, now we're doing it. You know,
I gotta imagine it's the same as Amazon. It's got to be close to 50% of their revenue. I gotta imagine it's close.
Is a whopping high number.
So the other thing that I got from your news, Chris, that I thought was rad was noticing that Kazakhstan is stepping up in Bitcoin, and it seems like when China gets scared and the China FUD goes out, everyone's worried. What's Bitcoin going to do? China's getting rid of their miners. Looks like Bitcoin didn't skip a beat and sent those miners right on over to Kazakhstan. And it's absolutely incredible to see the resilience of cryptocurrency in the space, because it doesn't matter if a nation will give it sovereign legalities, it's going to exist internationally in one way or another, and it will continue to find a place that it can thrive. And obviously, I think that what we can really take away here is that Borat definitely has some political pull in China. Very nice. I like.
Well, yeah, no, it's interesting because I think everyone China this, China that, but I think it just really worked as a handoff play because Bitcoin crypto, it didn't stop, it didn't speed bump, it didn't really do anything to it, if you ask me. And they've just moved elsewhere and they're being welcomed with open arms, really. So yeah, that wheel is going to keep spinning continuously.
They were lucky to get banned right now. Like, imagine being banned at the height of the bull run. Like, at least they were running and hopefully selling their Bitcoin as they were mining it to the way to the top. Because, I mean, that would have been a bummer. You have to shut down right in the middle of the bull run. The bull run wasn't going to stop. The upward trajectory wasn't going to stop no matter. You got miners in China, you got miners in Kazakhstan. It doesn't matter.
Yeah.
Blockchain is here to stay.
The Bitcoin demand is going to continue to rise. So the production will have to follow suit.
Yeah, and with the inflation and everybody's so scared, the general sentiment, at least in America, is fear for your money. So anyway, guys, I think we got 45 minutes solid here, so we should probably wrap her up.
Cool.
But yeah, I'm really stoked. I'm glad everybody tuned in. I hope you found value. And
I hope everyone enjoyed. And if you did enjoy, please be sure to like and subscribe below. And also stay tuned for future daily updates, weekly podcast. As always, remember, nothing but love. Stay C3. Cool?
Calm.
Collective.
Over and out.